Hello traders, this is Alex with the cotlive.com website. We're going to review part of my WD Gann Excel program, actually the master chart, right? And you can review this, again, it's cotlive.com. You can search around and find it, the links and stuff, and how to purchase this program if you want. I always try to put out a few videos, and I have a few out there already on how to use the program for the ones that have purchased this, and kind of give you an idea of its uses. Let's get into it here. I'm going to review. I kind of went through and tried to get it prepped for this video, but we're going to review wheat, the S&P, and gold on the master chart program, and we're going to isolate it. Again, there's several parts to this program, right? There's the traditional one where you input the data, and it spins around in the master chart square of 9 format. Of course, time can also be used in that format. You can also double it, right, which I'm not going to go through right now. What we're going to look at is this inputs of master chart and going down. Typically, I use this when you have a market that's made a recent all-time high, or maybe a high that's, the previous all-time high was 12 years ago, right, or something. And you want something a little more current. But anyway, the main thing I use it for is when it makes a new all-time high. The S&P, gold, and wheat all made new all-time highs in 2022. It's really good for stocks. I should have put a few examples in there, but I did not, because a lot of the stocks continue to grind new highs. And they're a lot simpler, right, because you don't have all the rolls and spreads that go on inside the futures market. Anyway, let's review the wheat. Let me pull up the
refresh
chart.
Unavailable.
Yeah. This is the spot chart of the wheat. The high was made on March 7th at 14.25 and that was a new all-time high. So I already kind of cheated here and plugged it in. So now again, the master chart, well, let's first plug in one here. Wheat, I'm going to put in the center cell the high price of 14.25 and I made a little cheat sheet, which if you purchased the master chart program prior to this wasn't on there, so let me know and I'll send it to you, a new version of it. Again, it's just a spreadsheet, right? You can create it on a separate sheet. I just added it to this one because again, I just used to do it manually, and I thought, well, that's kind of dumb. Got a spreadsheet here, so you want to input the date, which was March 7th, 2022, and the center cell was 14.25. Now again, I've added some things here that you can multiply it if you want it further out. Again, it's basically studying the cycle of 14.25, right, in the master chart and its revolutions. But to figure out where this date, right, comes down here to 0, that's pretty close right there. This date would need to correspond, right? So you just basically double it. So if you put January, this date right here, right? January 30th, 2026. And this date will match, right? Again, because you're squaring down, or not squaring, but master charting down the price from its high. Now I don't have the, again, here's 1425. Again, it's going less and less as it goes down. And now the prices, if you kept them that way, you could look back in the past, but you really can't do any projections into the future. So just a little simple math stuff, right? If you double this range of, or double this price of 14.25 and a quarter in price time, then this will equal out, right? January, March 7th. So yeah, it came in right here and it was exact, which is interesting. It shows a tick off here, but again, this just rounds it to it's a day, right? So normally it's not exact, so that's interesting, right? So that makes this pretty valid. But anyway, March 7th, this is what we plugged in. And I went ahead and plugged these onto the chart, all these dates. Now again, we're going backwards in time. Now as you get further and too far close to the future, it gets faster and faster, which is opposite of the other way. So again, after a couple years, it becomes almost too fast, depending on the price, right? I'm using 1 cent per day down on this grains. So let's, and again, I put these on X's, so you'll see X's on each one of these up to the current. And let's just see how it did. I mean, that's the easiest way to do it. I'll just kind of skim through this. I won't try to take up too much of your time on this video. You can see these red X's that are scrolling across the screen, right? These are those dates in the box. And I look for accuracy, right? So far, so good. Now, again, you wouldn't have probably traded this because you didn't know this was a high yet. You could have guessed. You know, once it broke some trend lines and maybe made the secondary high, then you start looking, right? I mean, unless you have other stuff coordinate this as a possible high. You know, there's simple rules, bull market rules that should apply. You know, after a bull market, it tends to get really fast and wild. I won't go into those right now, but again, looking at this data, it picked a lot of the swings and missed it. And again, you got to understand this is going to be off a little bit because we're dealing with a specific time during the day. So I always give it a day or two either side. And you can see that, you know, it hit some lows, missed it by a day, hit that one. This one was this chop, kind of a consolidation on the way down. Pretty much picked all this little trend up, hit this high, missed it by a day, I guess. Again, these extended moves down where it isn't cyclical, right? Like 6-7 days up, 6-7 days down. When it goes down 12-14, right? That's the extended move. And yeah, I mean, you know, then we got into the chop. It did pretty good. Hit this low, hit this low. This was an extended move, and that's what we're at currently. Get this trend line out of the way. Yeah, we're down about half, 50%, right? So you take notice of that. This is percentage. So that's interesting to me. So that one kind of worked, and you use those dates out into the future, and that should be helpful. And again, it's not really a trading platform, right? But you add it to your toolbox of stuff to trade, you know, along with Gann squares and the other master chart of time, astrological stuff, whatever you want. But it gives you kind of areas of importance and to maybe focus on, right? Let's say you thought it was bearish and you sold it here, you know, gave you an area that if it stopped, it could go up, but it didn't. It continued down, right? Places to areas to put stops, or buy calls against your short futures, that kind of thing. Let's go to the next one, which is going to be, I think I plugged in, the S&P. This is the E-mini S&P.
Refresh unavailable.
Yeah. Now, again, I've already kind of cheated here. This is from the January 4th high. And I won't plug this in and take up your time, but it does the same thing. Now, another thing you can do is put the square root in, right? These are the midpoints of the square. Again, loss of motion theory, right? In Newton's law, you can have loss of motion over time. Again, on the wheat example, 1425 was 37.752, and then you could just actually round it down to the square and plug in that data and see how it does. That's 1369, and that date comes in a little less, but again, you can plug that data in, see how it works. I like to, if it doesn't work, I mean, there's something up. So, and I'll go through an example of that here at the end with the gold. Anyway, let's go with the S&P. I plugged this data in, and again, 4808 and a quarter was the high on January 4th of 2022. Right, that was the high, all-time high. Now again, you double it, it projects. I plugged in the data March 5th of 2035. So that about a 10-year, 12-year run. Here's the chart. Again, there's that January 4th high, and I'll go through these are X's that I plotted on here. Missed it by a day on that low, missed it by a day from the high, kind of caught the chop, the extended period, right, where it broke the cyclical rhythm of the market and basically doubled it down. Anyway, that one hit it, that one hit it. That hit kind of a pivot, important pivot, right? Draw the trend line down. That was the breakout area. Kind of caught the last acceleration. Missed this high by 2 days. This one hit it exact. But you can see if you just do it generally, right, it does pick the swings pretty good. Of course, all the master chart does. I mean, I like the master chart. That's why I use it. But a lot of these markets that make new all-time highs is really, you really can't use much programming. Logically, the master chart going down is the only thing that makes sense to me. You can't use squares because, again, you're just made a new square, new all-time high, right? So your square of the range is going to be a brand new square. Anyway, and you can see this is current. Our next date is out here in March 1st, I believe, or end of March 31st. So, and again, those are derived March, let me see. Yeah, this was the March 20, let me see where current is. April 1st is the next date, which I believe is over a weekend. March 31st is the last trading day that you can use, so that's what usually I first plug in. So that's that. Now let's go to that's the S&P. Let's plug in gold. And again, I've already cheated and did it for you, so don't waste your time. Again, basically plugging in this, doubling this to 2072. Well, I can do it quick, I guess. Input date is March 8th, 2022. And the high on the gold was 2072. I'm just going to multiply it by 1. So that, again, to run it backwards to equal out the price. Now, again, here is the, here is the actual square. Okay, right there, right. It missed it by 2 days. So that's right here, right? Again, March 8th. Here's March 10th, missed it by 2 days. So that's equal. So we'll be running this date, these dates out into the future. Now you get too close and it speeds up so fast it's not relevant. I don't use it for that. Again, unless it's a big price structure. And again, you can multiply it out and get it further out so it isn't so fast. Because again, as you get close to the center, right, as you get closer, we're going backwards into the middle, right, it gets faster and faster and faster. Now on the normal master chart, again, I got this one, I have the time in, but it goes outwards and gets fat. It's much faster in revolutions in speed, but the dates get further apart, right? So it's opposite of that going down on the master chart. So anyway, let's plug in the gold. Let me get to that chart. Gold. I'm kind of going through this quick. Hopefully I'm
Refresh
not
unavailable.
confusing you, but I think it's important to get the gist. And you can plug anything in, not just all-time highs, but that's the only thing that logically makes sense to me. Again, those dates that we generated, these are the red X's. Again, this is the spot gold. So it's a little gappy because of how it trades at the end of the expiration. Kind of caught the gap here, hit this low, kind of in between, kind of in between, kind of in between. Missed this low by a day. This one missed it by 2 days. Kind of caught the little congestion. Missed this by 2 or 3 days. This by 2 or 3 days. This by 2 or 3 days. Did catch the gap. Caught this low. This is December 13th. Both these kind of caught something. Kind of missed it here, but kind of caught the acceleration. Missed the high by 2 days. Missed this one, and this is the next one, which is March 14th. Now, when I looked at this, when prepping for this video, it just wasn't gelling. Missed it by too many days on a lot of these. The master charts are usually pretty precise. A day usually, right? And sometimes you give it two. So then you got to think, what are the possibilities? Why is it having its issues? Now, of course, the secondary high was April 18th. Guy could look at that and plug it in. But once you go back and you know how bull markets operate, the lead month should be the highest priced, in the bull spread, right, of the market. Well, when I started doing a little investigation, a logical thought process, this is December gold of 2023, right? Still trading, but it trades 5 years out in the future or whatever. So, it was trading back then. Well, the high came in on August 6th of 2020, and you can see the Dece gold in 2022 did not make a higher high, right? So the bull spread was active, but this price was much higher. Again, in future reference, you always should know what your highest futures price is on any of the months that trade. If you're really into gold trading, right, you should know what the highest price is on all the futures charts. You have to do a little homework. Again, a lot different than stocks, right? You don't have to do that. But in commodities, because this high was actually the highest price. And it might have been February. I didn't do the homework completely, but I did notice this. Here is the 2024 gold, and its high was also higher. you know, 268. So, but again, it was the same date, August 6th, 2020. So, in looking at that, that kind of gave me the thought of, well, let's plug that date in and that time and price. And that's this right here. Again, I cheated here already and got it set up for you. Again, the high was August 6th, 2020. Again, which you could plug in here. And 263 was the high on the let's just take a look, see what it did. Oops, can't see the bottom. Yeah, see, this was this high, and we made a higher high here. But this high is relevant and important, just as important. So I took that price, 2063 on the spot chart, because that was your active month, right? So that's where I came up with that, and the date is also there based on the current and past future charts, like the 2D cold charts we looked at. Anyway, so that's where this came in. And once you plug that data in, August, here's your, I don't know, these are highlighted from the previous one. That's interesting. Anyway, so there's some relevancy there. But that's your, it was 7 days prior to the 90 degrees. So basically it's in between this right here. So we'll look at the data. I'm going to put you on hold here while I bring this chart up with the, I'll put little circles kind of on there to compare the two data side by side. Hang on just a second. Okay, I'm back. I plugged in that other data. Now, since it's older, right, we can kind of see what it did to this recent high that we made, of 2022 high. And these are the markings that I use for those, you know, this data here, right, that we'll be looking at, and higher. Now again, once it gets too close, I usually don't look at that data anymore. But you can, I'm going to just thumb through this, you know, kind of hit this low. I like this area actually. I mean, it had a big wild day after it, but kind of caught that hesitation on the extended pattern, right? It wasn't normal. It was double, basically, the length. Missed this high, which was the all-time high, by 2 days. It was the second highest close. You know, it didn't break trend till after that, so kind of like that. Caught this low, caught this high, kind of caught this extended move down. But again, this gave you the sell, this one gave you the buy. Again, the X's are the ones from the all-time high that we previously looked at, and this little circle symbol thing is the one we're looking at now from 2020. It hit this high, similar to this one. It's matching up, kind of caught this extension. Let me make sure there wasn't, yeah, caught that high, caught this extension, caught this high, caught this little sideways chopper high. This one missed it. This one kind of was a good inside, caught that. These two matched up exactly, and it gapped down and made a kind of a good secondary kind of thought process. This one, which is at the bottom of the chart, did catch that low, which was basically the double bottom, kind of a W kind of formation. This one caught that swing, and of course the previous one did as well. This one missed it by a day. The other one caught it. Caught the little breaks, caught this little chop extension, This one actually came in here, so it missed it kind of in the middle, and kind of matched up here a little bit. Caught this little heavy, again extended move, which broke trend, right? Caught this low, and today is March 4th, but March 3rd is the last date for the week, and when I'm doing this video, so that that seems to work a little better for my taste. I don't like missing stuff 3 or 4 days like the other one was. It did have both relativity, so you really want to kind of keep track of both, especially if you're a trader, right? Longer term, you kind of just maybe merge it together, blend your thoughts together. The next date, let me see, March 5th. Yeah, that's over the weekend. That's a Sunday. So again, that's where we're at current, right? March 22nd, which again, pretty nice date. That's the beginning of spring. That's a Wednesday, I believe. So now you also want to keep track. This is complete revolutions exactly. So that's also kind of important to keep track of. And of course, 180 degrees, right? If it's 90, 270 would be your opposition or opposite, right? On your master chart program. Right, the opposite, here's the date and opposition. Now again, it might be here, right? And opposite would be here, just as a rough example, if you drew a line through it. So that's the master chart kind of going down. There's all kinds of stuff you can do with that as well. But that's just kind of a simple thing to look at. It's real, it's mathematical. Using the square 9, I like it, and it shows some merit. I don't think you bet the farm on anything like that, but again, it's another tool in your toolbox for trading. To me, it gives you confidence. If you have a system approach of how you trade, and you apply this with it, and maybe some of the other stuff and astrological stuff or whatever you're into, right? There's all kinds of flavors out there. All have merits, but when you have more confidence in a specific swing zone, if you're a retracement trader, you can apply that to that. And if there's timing coming in, add credence. Of course, you always follow the trend. Gann used a 2-day trend line indicator that's his mechanical trading method. That was the only method he had. All the other stuff like this and his squares and all the other stuff that he applied, astrological stuff, those are just tools. Those aren't a trading platform. The 2-day trend line indicator was his go-to to keep in line with the trend. I want to do one thing. I've been putting out the planetary activity, and since I have gold, this is April gold. We can kind of gel the two even with that, right? Here was the low on the lunar eclipse, a big outside moon period up, and 90 degrees over was where I would have projected a high, and it was the high. And again, for every action, there's an opposite equal reaction. It was an outside period up. This was an outside period down. It broke trend. Again, I'd be looking for, again, this period is a pretty, that's, your halfway point to the 90, right? And again, it's breaking it down into degrees. So, dropped halfway dang near, right? This is the square of the range. So, and these are the planetary alignments. It hit this low on no activity, no planetary activity. Kind of this whole period was a void in a sense. And the way up, this little chopper was a void as well. So, but again, that's how you can apply this thing, right, with your master chart, right? I mean, you get confidence in a certain period, and you can then kind of break it down into smaller increments and try to figure out. And that's why a lot of people like to look at, daily charts and hourly charts and minute charts, right? You can break it down into smaller intervals. All right, my 30 minutes are up. Again, this is just a sample how to use this program. If you have any interest, let me know. And again, cotlive.com is the website. So if you have any questions, you can go to that, kind of scam around. The CFTC data has been delayed. So I don't know, somebody got hacked or something. So my CFTC data, I'm not going to update it until they get it caught up. They're a month behind. So anyway, that's all. Have a great trading next week. Bye-bye.